Today's guest is Luca Hany, the founder of Amboro Capital, a Swiss succession firm with a clear mission to acquire, operate, and grow exceptional SME in Switzerland or southern Germany. After years in investment banking and an MBA from INSEAD, Luca walked away from the corporate path to become a full-time entrepreneur. Thanks a lot for coming to the Holdco Builders podcast, Luca.
Thank you so much for having me, Mick. Pleasure to be here.
The goal today, there's only one goal, and it's to understand who is this person and the principle behind Amboro Capital. And you've worked in investment banking, traveled through 50 countries and grown up in an international family. But I want to go back to the moment in Amboro National Park. What happened there that made you decide to leave the corporate track and bet on yourself?
A great question. Let's quickly go back to 2023. So I just quit my job. So I've been working 6 years in investment banking, primarily advising on large transactions. And then I knew that I'm going to do the MBA at INSEAD. So I had a roughly 2 months break. So I decided to travel with a very good friend of mine, another entrepreneur. We decided to travel South America. So we went to a couple of countries and then ended up in this national park called Amboro National Park in Bolivia. Wonderful place, by the way, you should go. And when we were there, I started to think, what's ahead? So back at the time, I was 28 years old. I saw friends really moving on to the next phases in their lives. So I also did the same exercise. What do I want to do with the next 5-10 years? So I had a couple of options, either go back to investment banking after the MBA or actually, take a bit more risk and do something on my own. So back then I had 2 friends who launched successfully their own search fund. So there was a consideration I had. And then I started really to diving much deeper into what the ETA is, what search funds are. And at that point, I decided, okay, if I'm going to launch my own enterprise, I'm going to call it Amboro because the place was beautiful and there was no internet. So I really had to focus on myself and what's ahead.
So what were the next steps? What type of research did you do? Who were the people you were maybe talking to, and where did it all start at? Because I think for all of us, yes, you were in this park, but then you came back home and you're like, okay, it's just you and maybe pen and paper and like trying to come up with the next steps. So what was it?
Yeah, so for me back then, it was really a clear decision that I want to leave the corporate path to get outside the comfort zone, and that ETA could be one of the ways to get there. So I had a thesis that actually this could work, that it could work also in Switzerland. But again, it was back then only a thesis because not many people have done it successfully in Switzerland. So what I tried to do is to speak to as many people as possible in the ecosystem. So next couple of months, when I started the MBA, when I moved to Singapore, I had roughly 100 conversations with different people in the ecosystems. So both searchers, operators, investors, and other people in the ecosystem, to really validate that what I had laid out back in Amboro National Park could actually work. So that's how I got to the next phase in terms of, my confidence level.
And what was if you conclude the 100 conversations, maybe what type of advice people were giving to you in terms of maybe what type of company you should go after? What about the size? Should you do it alone? Should you do it with someone more experienced? What was the conclusion of those conversations?
Really, the conclusion for me was that at the end of the day, it really comes down to what you as an individual want to achieve. So there's not one model that you should try to fit everything in, but rather find a model or engineer a model that works for you. So that's exactly what I did. I took that advice on board. I really tried to go with a model that works the best for me, but I did some adjustments that I'm sure we're going to talk about later.
Okay. So then the next steps. Okay. You decided to build a fund. What type of structure you decided to go after? And tell me maybe the first conversations with investors. Hi friends, Brandon and Spacebar Studios are my go-to team for demand generation. They are offering a special offer to Holdco Builders followers, a free 90-day growth roadmap for your business. Get 2 to 3 concrete steps you can take today to grow your demand generation engine. Head over to spacebarstudios.co to claim your growth roadmap, as there is limited availability. First come, first served. Now, back to the show.
So, as I mentioned before, I was looking at different structures, and I realized pretty quickly that actually the traditional search fund model is the one that I'm going for. The reason why I decided for that is, first of all, I'm coming from a finance background. So I did investment banking, I did M&A for over 6 years. So I knew that I have the transaction experience to bring to the table, but I'm lacking the operating experience. And my thinking there was, if I bring investors on board, partners on board with heavy operating experience, I can kind of complement my transaction experience with their operating experience. So that was the reason why I decided for that model. So before actually jumping into fundraising, what I did is actually did an internship with Singapore's first traditional search fund back in April and in May. And it was a fantastic experience because it really showed me how the model works and what really works in a local environment and what I probably have to adjust for Switzerland. And back at the time, I really started to prepare the fundraising docs. I started to speak to investors. But before asking for money, actually, I asked them for advice. So I didn't go to them in the initial conversation asking for commitment, but rather to hear them out, to tell them my story before I started officially with the fundraising in summer 24.
So before you all started this, you had some type of plan for yourself, for your life. What is it? What was it back then? Has it changed?
No, the only thing that has changed is how I envisioned to get there. So again, back to the time, late 2023, I just quit my job. I knew that I'm going to do an MBA. But for me, that time was really to think what I want to achieve over the next 5 to 10 years at least. Because I knew if I'm going to stay in investment banking, especially in Zurich, it's like a golden cage. But you don't leave your comfort zone. That's why I allude to it flying business class, but you're not the pilot of your journey. There's always someone else who's the pilot. But actually, my vision was in the next decade to become my own pilot. So become pilot of my own journey. And for me, ETA was the perfect way to do so. So since then, that vision hasn't really changed. And looking back the last couple of months and years, it's been a great journey so far.
So what was the thesis, now before talking to the investors, before asking advice, what was the thesis and what is the thesis today?
Yeah, the thesis back then was really focused on Switzerland only, because I started to look at some statistics. But before I looked at the statistics, I just, walked around in some industrial areas in Switzerland. And when you walk around there, you just see so many SMEs. Then you look at their websites, you see the owner is nearing retirement age. So there is kind of a natural pathway to a succession problem. So that was the core thesis I had and I still have, is that Switzerland is an economy built around SMEs, and those SMEs, they tend to have a succession problem. So that was the core thesis back then. And over the time, I did my research. I spoke to many operators, many of those SME owners that had a succession problem, to really figure out whether ETA could be a solution to that problem or not. Because let's remember, back then, there's only been one traditional search fund out of Switzerland. And that was almost 10 years ago. So for me, there was a big question mark whether the ETA model could just be adopted to Switzerland.
Why is it only one traditional search fund? How is this possible? Because I used to study in Geneva, this is the place, in Europe. Can we say the capital of capital? I don't know, comparing to London. It could be so much opportunities, so many headquarters, but you saying there's only one traditional search fund. How doesn't make any sense?
Neither did it to me. So you're absolutely right. I think there are the two reasons for it. One reason, and I found it out in my conversations with similar people with a similar background, is Swiss people, they tend to be very risk adverse. So on average, again, I'm very generalizing here, but on average, for us, Swiss, having the comfort, the security, also the financial stability matters more than striving for the stars. It has advantages and also disadvantages. But I think that's the number one reason why people, they tend not to go for this kind of path. And another reason is really that in Switzerland, everything is a bit closed. What I mean by that is the entire ecosystem is really Swiss only. So there hasn't been much pass through of the different models. And I think also on behalf of the investors, they tend to underestimate a bit, what Switzerland is in terms of size, in terms of the SME density. So for that reason, it's not been a super open market. On the other hand, investors also have pretty much disregarded the market just because they didn't understand the significance of it. So I think it's both reasons. It's mentality and also the structure of the market.
When you open internet and you type in, I don't know, ETA, search funds, holding companies, lots of stuff is coming up. But you mentioned something interesting before, that not too many SME owners speak English. So does it mean that there isn't enough information, education around this opportunity and around the fact that they would maybe they don't even know that they could sell their business? Or what do you see?
I can only speak for Switzerland. At the moment, what I see is that owners, they're not aware of what's out there in terms of solutions for them. So often when I speak to owners, they see it in a binary way, which is either, okay, I'm going to give my business to my kids, or I'm just going to sell it to my competitors. But there's little education of what else is out there. So when I speak to them, when I have my initial conversations with SME owners in the market, for them, it's quite new what I'm doing here. So I think there needs to be a lot more education. And also kind of, it can not only come from, people like me, but also it should come from other people in the ecosystem, like the lenders, like the private banks, like the tax advisors. So I think there's a lot of work to be done. But again, in terms of the ETA journey in Switzerland, we're probably in the super early stage, which is a big surprise.
Yes, this is a lot of work, but this all means that it's also a lot of opportunity. And how has been the feedback? I, on my journey, haven't been using too many brokers to build me deal flow. I've been doing it myself, just reaching out to people, business owners. Obviously, it's a numbers game. Not all business owners are willing to share the details, share their journey. But the ones who are, these are the best conversations, which often last for 2-3 hours in their manufacturing buildings, in their warehouses, and you get a great overview of the market, competitors, and it's been my like a small MBA by doing this. But how has been your experience when it comes to those business owners? How open they are? You give them a call, do you send them an email? How do you get in touch? And what are the numbers? Let's say you do like 100 calls or 100 Guys, the business ownership journey is very lonely, and I've partnered with ScalePath to solve that problem. ScalePath has a network of over 2,000 business owners across the US and Europe, and if you book a call with the CEO, Rand Larson, today, he will introduce you to up to 3 business owners in your area. So again, go to joinscalepath.com and book a call with the CEO, Rand Larson, to get to know the 3 business owners in your area. Now, back to the show.
So what we do, so I'm lucky, I'm supported by 2 outstanding interns who I hope will also listen to your podcast. So what we do together is really to do an industry thesis to look at what niche do we want to target. Then do we target them specifically. So we figure out, okay, what are some names we really want to approach? And once we have that list ready, the target list, we send them a letter. So literal, a physical letter, and not handwritten, but very personalized, customized, because we think our thesis is this will open the most doors going forward. And so we send a letter to the owners that we think are interesting companies that we think we should speak to. So often those owners, either they send back a letter, a physical letter, explaining that they've already figured out their succession, or they actually give me a call. And often the most inspiring conversations are with owners who have a succession plan in hand, but they're just curious to hear what I'm trying to do here. And there, instead of hanging up, what I always try to do is to soak up their wisdom about the industry, because let's face it, I'm no industry expert. So I was a generalist before in investment banking. So for me, it's really to soaking as much experience as possible and to hear about their journeys as entrepreneurs. And what's really a common denominator that I want to point out is often owners, they're about 60 to 70 years old, and they're looking back at their journey. So ask them directly, look, I'm turning 30 next summer. Is it a problem for you that I'm that young? Because again, there's this stigma in this part of Europe where young people, they tend to have a bit a disadvantage. But often, surprisingly, they tell me, look, I was the same age when I started my company. So I'm really thrilled that you're doing this at your current age and not at age 40 or 50. So that's a big surprise that I didn't expect when I started with the journey.
A very specific question that lots of people reach out to me and asking, like the database of the businesses. Do you have how do you get access to this? I know how it works in Eastern Europe, but lots of people reaching out, they oftentimes struggling with this, and this also means that they can't have those interactions with the owners, because if you don't know about the businesses, you don't know about the owners. So how does it work in your system? Like,
this is one of the big advantages or disadvantages in Switzerland is you don't have a company database. So any private company is not obliged to disclose any information about their financials. So besides the website where you can approximate how many employees they have or what revenue they probably will generate, you have no clue what's under the hood. So that's kind of a very big information asymmetry if you compare it to, let's say, Germany, where you have the Bundesanzeiger, where it's publicly available for most private companies. As a consequence, the outreach process is a bit more broad than in one of those countries where you have a proper database. So what we look at typically is, when we look at a particular industry, we look at industry associations, see if there are any members list. And often those companies, they have the critical mass that are relevant for us. And then, we start to have those conversations with owners, and then we can calibrate the market size, the profitability across the different players in the industry or in that particular niche. On the outside, it's very hard to get a full understanding of the different players and the numbers. So it's a lot of trial and error, which in my opinion is a big advantage, because again, it kind of closes the market to kind of outside participants.
So trying to understand, like, how long, what has been your focus when it comes to, if we take like 100 hours of work or 500 hours of work, how much have you spent on raising capital? How much have you been spending on building deal flow? And maybe there is something third you spent a lot of time on, like meetings of the businesses, for example.
Yeah. So I think it has changed. It has shifted over the time. So obviously in summer 24, I did the fundraising for Amboro Capital. So there, roughly 80% of my time I spent on fundraising. But actually I used the remainder of the time, because back then in my MBA I had a summer break. I used it to actually start testing the outreach process with potential owners. So with prospective sellers, so I sent them letters, tried different hypotheses, what works, what doesn't work in terms of the outreach process, because I really wanted to be ready on day one of my search. And then I graduated my MBA in December, came back from Singapore to Switzerland around that time. And before officially starting, I really started to think what industries to focus. So I really did a deep dive on kind of the strategy, because I thought 24 months in a traditional search, they're going to be extremely quick. So I wanted to be ready on day one. So I really wanted to know exactly what niches, what industries I'm targeting, and how I'm going to do that. So I knew the letter outreach process is probably working the most. So that was the ramp up phase. So there I spent most of my time really on the deal flow process, on getting to know the brokers, on sending out letters. And right now, so I'm in month 2 of my search. Currently, I would say I spend most of my time speaking to owners. And often when I see that there is a prospect, I really try to visit them in person because that makes a huge difference in that part of Europe. So it's an origination, and I still spend some time on investor relations, but I would say it's like 10% max of my time.
Okay, I want to talk about fundraising because this is big one. Yes, you went to talk to those people asking for advice, not for money, but from one moment this asking for advice, I guess, ended up being like actually pitching them. So what was the biggest objection when you did that, and what was the answer?
I looked at my notes when I prepared for our conversation, and kind of the common denominator was really around Switzerland. So going back to my point where I mentioned that investors back at the time, they overlook Switzerland as an economy. So this was the number one objection I had in the fundraising process. Is really, Switzerland, besides banks and a couple of pharma companies, probably there's not much SME activity. So it was the number one thesis I heard from investors in the initial conversations. So my job was really to overcome that and to prove them otherwise. So that was the pushback I've heard the most. And there, what I've noticed is really show them the numbers, looking at the stats. So I told them my number one rebuttal was always, look, Switzerland is, in terms of GDP, is a top 20 country in the world. And 99% of all companies in Switzerland, they're SMEs. So with fewer than 250 employees. And this really was the light bulb moment for most investors who really then understood, okay, Switzerland is quite a sizable economy. It's not as huge as Germany, but it's large enough to spend 24 months searching in there.
Now, and what about some feedback you personally got? I mean, this was about the market, about Switzerland, but what about you, Luca? Like, what were some of those hard questions and maybe some truth which you didn't maybe want to listen, or what was it?
For me, it was one objection that I got, or one pushback, was that I didn't have operating experience. So back then, at some point, I was thinking, I should have become an operator and not an M&A banker by trade. But then I really tried to think how I can overcome that. And in a perfect world, yes, you have both operating experience and transaction experience, but realistically, you don't have it. So I really tried to overcome that by emphasizing on my M&A experience. And then also to point out that going forward, I'm really trying to look for operating experience in my cap table. But really around the lack of operating experience, that was the biggest pushback I've received. But I've learned to work around it.
And did any of those investors who said that this is like the biggest issue or a red flag, did any of them end up committing capital after you did your homework and explained like you did to me?
Actually, if I look at my cap tables, most investors, they had this point of view. And again, quite a few of them, they've ended up investing in Amboro Capital. So I'm pretty happy that I could convince them of that point. But for me, it's also, great to have that kind of feedback. But of course, there were some investors who kind of prioritized the operating experience more than the transaction experience. And I totally get it. But again, those investors that I have on board, they're well aware of my focus on transactions in my previous career. But they actually bring operating experience to the table. So I'm pretty confident that this is quite a powerful engine.
It's a hard and long journey. Again, why you choose to do it solo? Because it can get very lonely once in a while. Why is it this?
Yeah, you're absolutely right. So for me, the reason why I went solo is I wish I had a partner who was complementary. But for me, it was clear if I have a partner, it has to be someone who disagrees with me, who is not from investment banking, who is an operator. And for me, that person, I simply didn't find the person. And I was looking, I was trying to figure out whether is someone in network who could be a good fit. But ultimately, it's also a question about trust. So I don't think you can go into this potentially 10 plus year long journey with someone you've just met. So it needs to be a person who you can really trust. And I didn't have the person, so I decided to go solo. But then coming back on your point around the loneliness, yes, as a solo searcher, it's a lonely journey. I don't want to beat around the bush, but what was key for me to have the support system around, so with family, with friends, and also with investors, where you can speak about, questions, about concerns you have, then you can mitigate it.
Now, when it comes to expenses of doing it solo, the traveling, meeting the owners, I don't know, spending some capital on different software services, it all seems like very small numbers, but if you do it for some time, it adds up. So if you can share, like expense-wise, how expensive has it been so far, and maybe how much your own capital you decided to invest, like some rough numbers, if you can share.
Yeah. So in terms of what I invested myself so there I had a clear point of view that is key for a prospective searcher to invest their own money. So to have a proprietary allocation, because I think if you have the liquidity, if you have the means, and you don't trust yourself to invest your own money in your own search, then you're not doing it for the right reasons. And I was in a fortunate situation. I had some liquidity left. So I decided to invest roughly 10% of my cap table. I invested in myself, just because I wanted to have skin in the game and really to also have the investor mindset and not only the searcher mindset. Then on your question around expenses so far, it's hard to say what the run rate numbers are, but I would say the majority so far have really been on the startup expenses. So lawyers in Switzerland, they're not the cheapest in the world, as you can imagine. So that's eaten me quite a bit of my budget, but I've had that in my budget so far. And then the rest, software solutions there. I don't have a run rate number yet because I'm still figuring out different solutions. But I would say on software, I probably spend give or take $500 a month. And then probably same amount, bit more on travel and entertainment. So I really, as I mentioned before, I try to meet owners, go to visit their factories. And typically that's somewhere in the middle of nowhere in Switzerland or in southern Germany. And then one point that I'm particularly proud of is that I have two outstanding interns who are working together with me, and I'm paying them. So typically search fund internships, they're unpaid, but in Switzerland it's a bit different. So I really try to compensate them fairly, and they've repaid me with great work. So that's the biggest chunk of my budget at the moment.
And was it hard to find those people, as you're doing something reasonably new on Swiss market? So how was this process, selling this vision of what you want to accomplish?
What I tried to do is really to do the recruiting before I officially started. So I did the recruiting still when I was in the MBA. So back then I was still in Singapore, so I had some free time. So I thought, okay, why don't I just hire all the interns for 2025 in one go? And what I tried to focus on is really on people who have the entrepreneurial drive. Because again, I cannot pay what an investment bank or consulting firm is paying. So all those people who are out there just to maximize their income, they're probably not the right ones. But I really try to look for people who have the hunger to experience something new. As you mentioned, it's really only the second traditional search fund in Switzerland. So I kind of aggressively advertised that and saying, okay, you can become part of something that is super new in the Swiss market. And the two interns that I've hired, they've really demonstrated that. So they're really entrepreneurs at heart, and they bring that to the table every day.
I know it's, I don't prefer like giving advice to anyone, but if you could do like, what's the maybe advice to someone planning to raise capital for, let's say, solo acquisition in Europe today?
Yeah. Again, I'm not a big fan, not a big believer in telling people what to do, but if I had to do it over again, for me, what works most is really to find a path that works for you. So don't fall back into like your pre-existing boxes, but really figure out what you want to achieve and how you're going to get there. So for some people, this would mean, okay, I'm going to go with an accelerator. Some other people means I'm doing a self-funded search. For me personally, means I'm doing a traditional search with a bit of longer investment horizon. So really be open of the different flavors. And if you can bring that across in fundraising, you're going to have a much, much easier life. So that's my personal experience.
That's great. Now, when it comes to those companies, can you share, like, what have you analyzed? What have you seen? What are the maybe tailwinds of what you're trying to do, and what type of industries, niches, deal size? You can go down to maybe what type of structure, what do the owner expect? Do they want to build this business with you for another 3, 4, 5 years, or it's exit on the same day? Like, how has it been?
Mick, it's a big question. So probably need some time for that. But really to think back about the industries that we've been looking at is we've tried to figure out, okay, where are the tailwinds going to be in our focus markets in Switzerland and southern Germany over the next couple of years. And what we found is that there's some very interesting niches, such as testing, inspection, certification, clean rooms, other healthcare services, fire protection, certain niches of HVAC that are extremely interesting in the Swiss market or German market right now. And when speaking to owners, I mean, again, because we don't have a database, so we don't know the size of the target at the outset. So we've seen companies, ranging from EBITDA of 500K to up to 20 million, which were a bit on the higher end of what we target. But even those conversations were extremely helpful. And the common theme among those entrepreneurs was really to finding a solution for them as entrepreneurs to pass on the baton to the next generation and to find a structure that works for both them and for me. And what was a surprise is that owners, even if they're like 70, 75 years old, they're very open to a structure that is really emphasizing on kind of the long-term value creation. So owners, even the older ones, they tend to be open to seller notes, to earn-out structures, which came as a surprise to me.
And what about the market? Is it like fragmented? I mean, you talk to one business, do they have many smaller competitors or not? For example, farming in Finland compared to, let's say, Estonia. In Estonia, when you take the cow farms, it's oftentimes the large ones, 3,000, 4,000, 5,000 head cow farms. But in Finland, it's very small ones, like 100, 150. So a lot of like independent players, which you could ideally put together. Or if you sell your services or products to them, Finnish market obviously better because they all need the same machinery to take care of the cows, but there's just many more farms to sell to. So that's the idea behind the question to you.
Yeah, definitely. Because core criterion is not only how the market is evolving. So if there is an addressable market that is significant enough for us to play in, also whether there are tailwinds in the market, but also whether there is enough fragmentation. Because for us, it's key in the thesis, whether we can go in and really have a way to win by organic growth or inorganic growth. And for that, the fragmentation is super important. So I'll give you one example. So I mentioned testing, inspection, certification, so TIC. And what we thought when we started Thesis is that it's a fragmented market, but we didn't know exactly how fragmented it is. When we created our long list, I quickly had a look before our call, is we found like 300 small players that only do testing and inspection and certification alone. So very fragmented niches, but this is a big surprise how fragmented the market is. And there hasn't been any consolidator in the market, in the Swiss market. Whereas you look at other markets, like in Germany, there are consolidators out there, but in Switzerland, it's not consolidated yet. So they kind of supported our thesis that looking at a fragmented market with sufficient tailwinds is absolutely key in our thesis.
Now, when looking at those businesses, how do you define at this stage, like what is a great business? Not just by the numbers, but by the, if we can say, by the feel of it, and what maybe non-obvious signals do you pay attention to?
What I really love to do is to go to trade fairs, to industry conferences. And what I try to do there, my primary goal is not really to find companies that are looking for a succession solution, but rather to hear what's going on in the market. And for some industries, you go into those trade fairs and you can sense that there's such a positive atmosphere. So everyone is positive about the industry. So recently was the conference for clean rooms. And people were enthusiastic about the industry, about the growth prospects. On the other hand, I was at the trade fair for packaging. People were quite bearish. And you could sense how people were speaking about the industry. And the same applies actually to the companies. So when I speak to companies at those trade fairs, typically you have sales reps who are there, sometimes the owners, but often sales reps. And if they speak really positively, very enthusiastically about their companies, I know the culture is quite good there. On the other hand, if they're a bit skeptical, if they're not really positive, then I know, okay, people, they don't get up in the morning because they really want to work for the company, but because they have to work for the company. But I'm really on the lookout for companies where every employee is getting up with a smile on their face, and really the companies that I've encountered so far, the great ones, they've all had this in common, where you had the people like from admin assistant down to someone in logistics, everyone was proud to work for the company. So that's the number one non-quantifiable trait that I'm on the lookout for when looking at a new target.
And when it comes to the size of the business, what is, like you said, like maybe 500,000 is a bit too small, 20 million EBITDA is a bit too large. What is the sweet spot, so-called?
Yeah, the sweet spot for me at the moment is anything between 1.5 million to 5 million EBITDA in Swiss francs. On the lower end, my point of view is everything below, it just adds complexity, it adds owner dependency. So it only makes sense if it's an add-on acquisition. But for a platform, you need to have the critical size. Everything above 5 million, what I see in the Swiss market is it's where you have the small cap P funds, the family offices, where they're starting to get engaged in a process. So for me, the sweet spot is really somewhere between 1.5 and 5 million, with the vision of surpassing the 5 million threshold, just because it opens you new doors in terms of capital, in terms of potential pathways to liquidity.
What is your experience and what do you see currently when it comes to this debt and equity ratio when doing a deal in Switzerland at this stage? Because there is a reason there is not too many those people and companies doing what you're trying to do.
Yeah. So in Switzerland, in terms of, maybe let's start with the debt side. So there is a lot of competition among lenders, which is often translated into very good conditions as an acquirer. So recently spoke to someone at a very large bank because we had a conversation around the projects we're working on. and the initial terms were quite good. So typically these days, you probably have to think around all-in interest rate of 3 to 3.5% max, for up to 70%. Yeah, let's say 60% LTV, which in my opinion is a great deal, especially if you compare it to Germany, where you pay probably 1 or 2% on top. So on the lending side, Switzerland is super well. The infrastructure is super well. On the equity side, again, there you also have the flexibility to raise equity. You have a lot of family offices that are having realistic return expectations. So there is definitely also demand from equity holders. But overall, again, if you take both factors together, equity and debt, again, it's a big surprise that there has been so little activity from ETA entrepreneurs in Switzerland. So there's no reason why there shouldn't be more.
What about the overall competition on deals? When you go and meet those business owners, how often do they get approached? Those physical meetings as well, not just those big four firms reaching out via email. I think this is, I don't have this experience, but this is a bit like lazy way of doing this. The magic is actually meeting in person, getting to know the founder, how much competition you see, how many folks doing what you're doing. And again, could be funds, could be family offices.
It's hard to quantify. But when I had the same conversation with an owner last week, and he told me that he's getting emails from PE funds, from family offices every week. And for him, what's important is that personalized touch. So really going there, it pays dividends. But in terms of who else is in the market, yes, what you have in Switzerland quite a few is those classic MBI candidates. So that typically they're people like you and me, but they have regular jobs, regular incomes on the side. They're looking for a company that could buy. Not a really institutionalized, but really on their own. Then you have family offices. So family offices in Switzerland, they typically have lower return expectations. So I know some family offices, they're happy with 10 to 15% annualized returns, which sometimes makes it more difficult in a competitive process because they can just outbid you in terms of the multiples they can go in with because they're happy with a lower return. Then you have private equity funds again. But in the segment where I'm playing, the competition is not really coming from private equity funds because it's too small for a platform acquisition. And often in those niches, they're so fragmented. You don't see that many PE funds that kind of working through the same transactions that I do.
You mentioned acquisition multiples. What are the expectations? What is the reality when such deals get done? And what have you seen?
It depends on the niche. It really depends on the niche. So one example is really on, let's call it more blue collar type of a business, which is HVAC. HVAC, the sellers in Switzerland, they have very realistic expectations. So there, I've seen multiples ranging from 4 to 6, 7 times EBIT. A bit more on the higher end if it's mostly recurring revenue, whereas on the lower end, it's mostly companies that have either some customer risk or high project revenues. So that's the range that I see in that market, in the HVAC market, for instance. Then if you move on to TIC, so to testing, inspection, certification, there you see a multiple uptick simply because the tailwinds they're more favorable. So growth is often, even in Switzerland, rewarded by higher multiples. And then on the other end of the spectrum, you still have software companies where I've seen a lot of owners still being stuck in 2021. So they really have those high valuation expectations, which often makes it hard to transact at the current valuation levels.
When and why did you decide to add Southern Germany as a target market for deal flow?
So for me, the thesis was always clear that the nucleus is going to be Switzerland. Because I'm Swiss, my network is here. I actually also have grandparents, they're from southern Germany. So I thought it makes sense to include southern Germany in the scope because there are a lot of similarities between southern Germany and Switzerland in terms of culture, in terms of the work ethic, in terms of the end markets. So I thought it would be a pity just to draw my line of my search just simply because of a geographical border. So I said, I'm going to include southern Germany in the mix because there are a lot of synergies between Switzerland and southern Germany. And I can really have a chance to win a deal in southern Germany because there, again, because of culture, an owner from southern Germany is often very open to sell to a Swiss person. So it makes life much easier to win on a personal level. And combined together, I thought in a traditional model, to be busy for 24 months searching that geography, that perimeter of southern Germany and the German part of Switzerland is really giving me enough targets to find one fantastic transaction.
So you're doing it solo. You're once in a while feeling this loneliness. What are the thoughts? What are the struggles you've seen, and what are you maybe struggling at the moment? Okay, once this call ends, what are you trying to accomplish, and what is something you're trying to solve?
I mean, daily struggle is really a day starts at 0, which means we need to send out letters. We need to go out there and meet the owners. We got to call the brokers and see whether they have new deals. So it's not an engine that keeps running and running, whether I'm around or not. So, and this is my biggest challenge at the moment is really to keep going. I love what I'm doing, but it's extremely rewarding. I would do it absolutely over again and again. But every day is a new day. And my belief is still like that reliance will kind of that attitude will pay off over time, but it requires a lot of energy. And that's why I'm so grateful to have the support system with investors, with friends, with family, to have them around me. So that's a big challenge that I have at the moment, is really to keep the engine going and really translate it into one fantastic acquisition.
What is maybe some most recent conversations you've had with your advisors? What are your maybe questions for them, or do they sometimes reach out to you, or how have you set this up, this information and all that?
Yeah, so I have some investors, they told me, look, Luca, if you have a deal, just let me know. But before that, don't bother. Then I have some other investors. With them, you know, I'm speaking to on a recurring basis, on a weekly basis, and really have a more day-to-day kind of conversation with them. And a common theme among my conversations with investors was, because I'm quite early in the search journey, is where do I pull the trigger? So the analogy that I have is, it's like you're going on a hunt. You have a rifle and you have one bullet in there. So question is, if you see a chicken, will you shoot, or will you wait for the bear that might be on the other side of the mountain, with the risk that there's no bear waiting and you're going to starve? So it's the same analogy that I have with my investors is, okay, what is a good business versus what is a great business, and where do I pull the trigger? And I think it's a learning journey. And ask me again in let's say 18 months, I will have a different answer to this. What constitutes a great business? But it's something that I'm calibrating every day.
And what has been the feedback? It's interesting you mentioned that. What has been the feedback? Because they've done a lot of deals. Some of them are great operators, you said. What has been the feedback?
The feedback really has been consistently, look, you're early in the search journey, take your time, but if there is the right business, pull the trigger. For finding the right business, yes, we all have the wish list of 80% plus recurring revenue, 10% the market growth, and so on, fragmented market. But in reality, you have to do a compromise there. So you need to know where you're fine to compromise. But I think what's often overlooked that I'm trying to bake into how I look at businesses is also, does the mission of the business match with what I want to do? So again, is it worth for me to get up in the morning and to work with this company for the next 10, 20, 30 years? If the mission is there, that's absolutely the case. But if I don't see the mission, I'm not going to pursue it, even though the numbers would be fantastic.
Thanks to this podcast, thanks to Twitter, lots of people have reached out who are on a similar journey, and not surprisingly, many hasn't accomplished what they expected to accomplish and went back to their so-called old life. And what about you? What is the red line for you? Like for an average searcher, I think it takes like 24 months to close the deal. You're in early phase. This question is around lots of theory, but what do you feel and what do you see when it comes to your journey?
Yeah.
Where is this red line?
Yeah. So my red line is really when I see I've done everything that I could and I'm still not there yet. Again, the search journey, a lot of it comes down to luck, but I'm a firm believer that you can, to some extent, force your luck. So for me, that red line would be when I realize, look, I've tried everything. I've changed the approaches. It still doesn't work out. And so it's time to move on. But until then, I'm really 100% committed in going all into this journey, because I think it's a huge privilege to be doing what we're doing. So I'm really trying to embrace it. And that's why to be honest, I really don't think of, what I'm going to do if the 24 months end without an acquisition. But for me, it's more about learning along the way and embracing the journey, because what I always tell myself is, as a person, if you embark on an ETA journey in those 24 months, you're going to learn so much more than if you were to stay in your, let's call it, conventional career. So for me, if I would stay in investment banking, I wouldn't learn as much as I do now.
We need more people like yourself, Luca, because too many people give up. You mentioned being open. What I'm trying to understand is, are you willing to change your approach? Just sharing a journey, you go and try to acquire a business, but the owner, you get to know the owner, you share your vision, your team and everything, and he's like, okay, why don't you buy half of the business and we go and build a platform? Because what you just said makes total sense. I have, 5 years of energy, and then I would like to retire and I would like to get paid X amount I would get today. So are you that open to follow that type of approach when something comes? Because all stories are different.
I think for me, key is really to have the long-term horizon and perspective. So, and it's something I always, try to pass along to owners when I speak to them is, first of all, the great advantage of working with someone in ETA is we can find a flexible solution that works for both of us. So for me, the only kind of criterion I have is that it has to be a majority acquisition. So that's my red line. But everything beyond that, look, I'm super flexible. My investors, they're very flexible, and we can find a way that structures it that way that it's a win-win solution for both parties. And it's great that you mentioned it. I had a conversation last week with an owner who's still quite young, and he's thinking exactly about that, whether to sell the company, let's say to a private equity fund, or to embark on a journey with a model such as mine, where we can go out and consolidate that specific niche that the entrepreneur is in.
You talk to a lot of smart people, and you have a lot of those smart people with you on this journey. I want to wrap up with two more questions. One is what is the best investment advice you've ever got?
Best investing advice I've ever gotten is really to think about the compounding effects. What I mean by that is really to invest early and then reap the benefits later. And that's something I've done myself. Is I've really tried to invest early and stick to it. And the same is with what I do here. So I try to learn as much as possible, because I think if you learn 5% more every day, it's going to compound. And it's the same as investing.
Do you feel any pressure doing what you're doing?
Honestly, no, because I think it's a huge privilege that I'm able to do what I'm doing here. Pressure to me means something, that I have pressure to feed my family, that I have pressure to pay my apartment, that I have pressure to pay my health insurance. But I think the pressure that we're talking about in this journey, in the ETA journey, it's not a pressure, it's more a privilege that actually we are in a position to actually do what we love, which is to find and acquire great businesses. So for me, it's when people tell me, hey, you have a lot of pressure, I really don't see it as pressure, but rather as an opportunity. Because again, as you mentioned, I've traveled more than 50 countries, and I've been in places that are less fortunate than Switzerland, and there we realize what pressure is. But embarking on an ETA journey, in my opinion, is not comparable. So it's not pressure.
I know you've been a busy man recently, but have you had time to read a book? So my question is, what is your favorite book?
My favorite book, it changes. It changes every month, depending whether I read a new book. But looking back at the books I've read recently, one of my favorite books was actually the autobiography by Bob Iger, who's been at Disney for a couple of decades. So I didn't know Disney before. And I've read this book when I was traveling a couple of years ago. And it really struck me that it's a person who has really worked his way up, and really by being able to listen to people, to read the room. And that's something I'm trying to also do when I speak to owners, to really to listen and not to talk too much.
Okay, it's been very great talking to you, Luca. Awesome journey. Thanks for sharing all the details. I think it's fascinating, and I'm very excited for the next 6 months for you, and I would be even more excited to do it again 1 year from today, because all the growth and all those stories you have then, it's gonna be very good. So thanks a lot for your time today, and talk to you soon.
Thank you so much, Mick, and great. Thank you so much for having me, and again, keep up the great podcast. I love it.